Good morning everybody, welcome to this Smart Charts European session. Hope you are all well. Alright, so let's dive in. So we've finally come to the highest economic news announcement of the week and actually of every single month, which is the US non-farm payroll report. Released at 1:30 p.m, it's data from the Bureau of Labor Statistics showing the change in the number of employed people during the previous month, excluding the farming industry. Usually released on the first Friday after the month ends, and job creation is very important. It's a leading indicator of consumer spending, which affects overall inflation, which is used by central banks to determine interest rate policy. And the forecast is for 218,000 jobs to be added to the economy last month. So when it comes to these high impact news announcements, of course, we're not trying to predict what the outcome will be or how the market will respond. We first of all manage risk, okay? And so if you have been trading over the past several months, really, most of the trends have been around the US dollar. That's where the big theme has been. So quite often when you're trading those big themes, you might find a lot of your trades just really around the same currency pairs, the US dollar pairs. So you've got to be mindful of not being too heavily overexposed to the US dollar in front of these high impact news announcements. Now, we know this week so far, the US dollar has been a bit mixed, hasn't it? Okay, we know that beginning of the month, we saw the end of last month, a lot of big trends coming to an end. So we've been dealing with a bit more ranges, a bit more choppier markets this week so far. We did highlight that would be the case. We started off the week with some very good trends on the yen pairs actually, on the way down on the intraday chart, and we're still looking for continuation there, but many other currencies just a bit choppier and a bit rangy. So it could be a quite wild news announcement, so we've got to manage the risk and just be mindful if you have any US dollar trades on in front of that high impact news announcement. So first thing we look for, risk management. Second thing is we look for any surprises, okay? Are there any surprises in the economic data? And then let's see how the market responds. And maybe there's a big readjustment of people's positions. Suddenly they're like, oh, I need to buy US dollars, I need to sell my US dollars. And then maybe we can get some big moves in the market, which could create a sustained trend. We don't know, but we're going to be ready and waiting and be prepared to capitalize on those type of opportunities. So let's see how the dust settles, okay? And this might give the market a little bit more of a directional bias as we see out the next few weeks of the month and also of the year as well. So let's see if we get a nice little theme on the US dollar. And for now though, what's the focus for the rest of the day? Well, let's dive into Smart Charts and have a look from a technical analysis perspective. Okay, so we're looking at the tools tab here. So something that we have been highlighting all throughout this week really, and since last week, is the strength in the yen. Okay, that's actually where all the clarity has been this week. We started off the week with those Japanese yen pairs on the 4-hour chart phase changes, beautiful downtrends. And then midweek, they just started to double bottom and go a bit rangy. And we're looking for the trend to continue like it did at the beginning of the week, okay? And since then, we've been doing a lot more positional trades. We've had some weakness on some of the commodity currencies, but especially the Aussie, which has been weak every day. But it was such a surprise news announcement, and we had a big drop. And then we're just gonna wait for some trends and cycles to develop. So we're just gonna be a bit patient there. The yen is still going to be that big theme to keep an eye on. You can see the US dollar, okay, a little bit weaker, but still it's been a bit of the middle of the ground this week, hasn't it? Okay, so this is why things like if we go to the charts tab and go to the 180 phase changer, euro yen becomes quite interesting here. So the 180 phase changer, one of the strategies we go through in trading certification workshop. I love this strategy to help identify any momentum trends developing in the market, utilizing moving averages, relative price patterns like ring highs and ring lows. And we have been trading the phase changer this week. You can see here on the 4-hour chart, we had nice clarity around these moving averages. Price kept on coming into these moving averages and actually moving off those moving averages. So we've been trading those moves off the moving averages. A lot of the yen pairs have done the same thing this week. But on the 4-hour chart, we're not really in that situation anymore. But the daily chart still seems to be quite interesting because we still have cycle structures here on the daily chart coming into the daily moving averages. So, different time frames give you different clues, okay? So right now this daily chart is in those moving averages. Now, as many of you know, I like to trade using moving averages, and I like to trade in the moving average zone. Why? It just gives me a focus. I can say, okay, well, sellers have turned up here on these moving averages before. All right, maybe they could turn up here again. Of course, historically, price will also break through the moving averages like they're not even there, okay? But this is why we look for other clues to stack in our favor as well. And what we have here with euro yen is that this low point becomes quite interesting, because if we can stay below this low point, then it's a sign of conviction of sellers staying in control of the market. And what we like is the fact that maybe the market could get down to some of these low points. The market does tend to gravitate to multi-year swing highs and swing lows, so there is a chance if sellers do remain in control of the market, maybe they could get down to some of these low points here as well. So what we have is a confluence of resistance at levels all developing at the same area, and we have a visible target level in mind somewhere around these low points as well. So on top of helping to identify potential opportunities, and again, if you're not familiar with how Smart Charts is helping you, please make sure you're utilizing all the resources available to you, all your e-learning materials in your Learn tab, all your online classes, workshops, boot camps, and live events tab, your coaching sessions. You have a lot of resources. Make sure you're utilizing every single one of those to your advantage, okay, in helping you to educate yourself in trading the financial markets. But Smart Charts will also help the risk management side. Click the down icon, populate an entry price of the blue dot, stop loss of the red dot, target the green dot, which can all be adjusted according to your own user preferences, okay? The key though is to keep that risk low. Make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. We can also adjust the target level a little bit to get into somewhere around these low points, okay? So just squeezing that a little bit more of a reward to risk there. And then we can set an expiry. I like to set an expiry on this particular strategy, on this time frame of current bar close, and then decline or accept the trade. And what that means is if sellers don't turn up and go to the entry level, this pending trade will expire. Didn't win, didn't lose, it didn't cost anything. But if they did decide to turn up, then that will trigger into a live open trade. Either it goes to the target level or it goes to the stop loss level. So either it's a winning trade or it's a losing trade. So let's see how the day unfolds. But that's it from me. I'm going to wish you all the best with your trading. Bye for now.